we're good to go. Let's see your charts. Let's see your homework.
Did you see what happened, Beanie? Oh, here it is. How do you do redo again? So I accidentally delete that.
Just Control Z.
What about redo? Is it Control R?
Control Y.
Control Y?
Yeah, Control Z will go backward. Control Y will go forward.
Oh.
So what did you remove?
Accidentally, hopefully, hold on. Actually, it's still here. It's still here, actually. It's right here. Okay.
Okay.
That's fine. Yeah, so starting today, something weird started to happen. When I switch from hourly to monthly to show like the macro view, click this, kind of does this thing.
Yeah, that's because at the bottom of that chart, click on auto.
Where is that at? Here?
Go down where your mouse is, right
this one?
there. Yeah.
Okay.
Click.
Again?
So you must be zoomed out too much. That's why.
But when I zoom in, it kind of just does this. Instead of showing me like...
You see at the bottom of the last green bar? At the bottom there's a double arrow.
Yeah.
Yeah, click on that. And then now zoom. Yeah, that auto is gone. So click on it again. Yeah.
Oh, nice.
That's the auto that's messing with you. Like when you do it manually and you try to move your scales, the y-axis up and down, it messes it up.
Oh, okay. Nice. Okay.
Okay.
So what I did is I just tried to first draw my monthly fib, just so I can start with that. So I just picked March 2020 for the monthly. So I draw the first fib here, and then it didn't breach the 0.38. So you just move the top, we do it here, and then right here it breached the 0.38, but also it breached the 0.786. So I don't know where I'm going to land yet on this next move. I have to see if we're going to go, reverse to the upside, or if it's going to be a continuation still. So that's where I just stopped my monthly, but I just wanted to have it in place so that when I start going to the lower time frames, I can see.
Let's pause for a second.
Okay.
When it breaks that 78.6% retracement, what is the expectation?
We're gonna reverse, essentially. Yes. We don't know what's gonna happen. Like we're either gonna reverse to the upside, but we have to kind of let this play out.
Hold on, not reverse to the upside.
Or it's gonna change.
So your fib currently is drawn assuming an upside.
Or reverse to the downside.
Right. So as soon as you break the 78.6, at least the way I read this is I'm gonna go to the downside now.
Yep. Exactly.
Okay, so there's no reverse to the upside. From upside, there's no reverse to upside, right? So
yeah, exactly. Yeah. It's just reverse to the downside, and it's already kind of made its move a little bit, but we're just for confirmation. Waiting for confirmation on what's going to happen right here, so we can redraw our fib to the downside. So this is the macro level trend. And then I went to the weekly, and let me go zoom out a little bit. And then I started the same spot, so 2020. And then the weeklies are the dots. So I started down.
If it's in the same direction, right? You don't need to redraw it. You don't need to overlay the weekly on the monthly. You're gonna get this exact same result.
Yeah, exactly. That's why I was actually going to ask you, how would you manage it? Because it's kind of just cluttered. So you just remove it then completely?
Yeah, I would just keep the monthly as the primary one. But even that, we've seen that it's broken already. And then
Yeah, I stopped here because I wanted to get your feedback on before I delete it, because I know we did break right here the 32, so you redraw it essentially.
Well, so keep one thing
so
in mind.
you move this one, huh?
You move. Hold on. So if you're going in one direction and it pulls back to 38.2,
yeah,
right, and it doesn't breach it, your assumption is that it's going to continue in that same direction. Right? That's your assumption.
Yeah.
But you don't know where to move it to until you make a new high.
Exactly.
Okay, so there's nothing to the downside, at least the way I read it.
Yeah, you would just move whenever you get it. You just move the leftmost.
Yeah, I just move the high or the low depending on the direction that I'm going.
Exactly.
So now as you scroll to see what price is doing, you see that it continues to have deeper and deeper retracement, but it is not making any new highs. Even the recent highs is not able to capture those recent highs.
Exactly.
Yeah.
So you just keep waiting.
So there's the waiting part is there's some assumptions you have to make. When it reaches the 38.2 for the first time, you can say, is it going to reverse? If you get some sort of a signal, you take that trade. It doesn't make a new high, so you just exit. So you have to think of it this way. Every time it comes to a significant area, you're assuming it's finding support, right? Those are dynamic supports.
Yeah.
You find support, you take the trade. If you get the signal, we haven't talked about signals, but I'm just saying, just for the concept, you get the signal, you take the trade. It does it again, you get the signal, you take the trade. The third time it goes to 50%. If you take the signal, you take the trade. Right? But now it fell twice to make a new high, right? 38, it fell twice. So at 50, you're more cautious. You're like, okay, I don't need to target way up there. Maybe, I'll take a little bit of a profit. So if you keep going, you see that it's not able to make new highs.
Nope, just sideways.
Just sideways. It
right here, it breaches the 50 again, like you said. So you want to be cautious every time it goes to the 50 after not making new highs. And then if you keep going, you'll see it actually.
So it just kept going, right? It's not making new highs. It just kept going. Now here's one thing that I would do. When it failed to make a new high after the first attempt at 38.2, so to the left of that.
This one?
To the left.
To the left? This one?
Yeah, right there, right? So your first try is right there. It failed. It goes down to 38 again, and then it fails again to make a new high. At that moment, I'm at the lower time frame. I'm already starting to consider a Fibonacci retracement, the other side.
On the downside?
On the downside, because the possibility of a downside is coming, and it's all about trying to get in as early as possible, but depending on overall direction. Like if the monthly is in a strong uptrend and I take the opposite direction, my stops are tight, my exits are quicker, because what I'm doing is I'm just trying to capture, hey, there's a big move down retracement, I just want to capture that. And usually, remember I said green to green? So it failed that 38.2 to make a new high 1, 2, 3 times, right?
Yeah.
And so I'm going to take a position next time it goes down to 38.2 to exit at the following green, the 61.8.
So you'd enter here to exit here?
Yeah.
Okay. Where, I guess in this position, where would you kind of say, okay, I'm going to cut my losses? Because it went all the way down to the 50%, but then it retraced upward, to the 23.6.
It's a good question. Where it comes down is a matter of preference and experience, right? So it failed to clear to make a new high 3 times after it reached 38.2. So I'm going to assume there's a strong bias to the downside. So when it comes down to the 50, if I take it, I'm exiting at those highs, right? Those 3 highs that it failed. If I take it at the 50 is to exit there.
Yeah, because
yes, somewhere near there. I don't go all the way to the top, right? It never goes all the way to the top.
Yeah.
It did at that point, but I'll exit somewhere there. But in this instance, I'm most likely taking to the downside. And where am I cutting my losses? A little bit above those 3 highs. Yeah, a little bit above.
So I guess if you're entering this on the downside, I see.
That's what I'm saying. So you a little bit above that high, somewhere around there is where I cut my losses.
But in this case, you wouldn't have to, at least for the first trade, right? Because you see, okay,
no, so the first trade is not there, right? So
yeah,
it went down. I took upside.
Yep.
Right? It didn't work. I took it again. It didn't work. Now I'm not taking it to the upside again. So stay right there, and as it comes down and closes below the 38.2.
Oh, so you'd go all the way here?
Yes, that's where I take the entry.
I see. Okay.
Right? You can take it earlier if you say I have 3 times it failed to make a new high. Right? There's other techniques. Right? Triple top is a reversal and things like that. So we haven't gotten into reading chart and candlestick patterns yet, but I would like in this instance, we're in a strong uptrend. I would take it there. My wrong would be at the high to the left.
Your what? Sorry.
The high to the left of it.
This one?
That's not left.
Or to the left of it?
Yeah.
So this one?
All the way. Right? Higher. Like
right
the
here.
First, after it came down to 38.2, that high. If you go to your left.
First? This one?
No, go more to the left. That
this
high.
One right here?
Yes. I want to use a good area where price is failing. So I want to give my trade room to breathe. Because if you make it too close to the other two, you're stopped out.
Yeah.
Like if you look where it came to the 50 and then went back, how high did it go after it reached the 50?
After it reached the 50?
How high did it go?
All the way to the 23.6.
Yeah, so if your stop is too tight, you'd be stopped out.
Yeah.
That's why I give myself, that's the area.
A little bit of room. Yeah.
That's the area, but wiggle room. I don't see that, right? If scroll to where we don't see that line.
Or like more. That?
More. Okay, right there. That's good enough. So when we breach 38.2, I'm taking my entry, right? Don't scroll yet.
Okay.
So when it closes below 38.2, right there, I take my entry. Yeah. Where is the logical stop?
For this?
Yes.
I guess, like you said, it would be the resistance point up here, right?
Yes, exactly. Because and I give myself a little bit wiggle room. I take the tip of the highest and give myself a little bit of wiggle room.
Yeah.
So draw a line with that wiggle room in place.
Okay.
Right? This helps you. Like right about there is where I would say I would put the stop. Right? Now as you scroll, Like in real trade, you don't have this hindsight thing, right?
Oh, oops. Yeah. So you'd really leave it all this time, even if it's like so many days here?
Yeah, I don't have any objection with that because I have said that's where my stop is. It's not number of days, right? It's
But
number of days
would
if I do options and it's about to expire on me. That's different.
yeah.
Yeah.
Okay. But if you were doing like playing it like for real with, days that are expiring on you, you'd definitely cut it before, right?
Yeah, because if
You don't have a
like
choice.
my entry, where's my entry?
Here.
That right there, right?
Yeah.
So if that that's a Thursday,
Hmm.
if I have an option expiring the next day, I'm already out whether I like it or not.
Within
Right?
an hour.
I'm not even waiting to get stopped out.
Yeah,
I
right here.
to me that's not enough room. I needed room to go all the way to 61.8.
Mm.
So I might do the following Friday. So if that day is uh the 6th, the 14th is the following Friday. So where is price on the 14th? Let's see.
That's
Where,
right at the
where do you have
50%.
to scroll? Oh, this is daily.
Yeah.
Oh, I'm thinking this is hourly chart. I don't pull the trigger on
No.
daily chart.
Okay, I was gonna say
Yeah.
that would still be it's not a lot of time when you look at the
No,
daily
no, no. We're
setups.
looking at the daily, but as a concept, right? I'm just giving
Yeah.
as a concept. This is how you do it.
Okay. And also for the fib, like I deleted it because I had a daily fib too, but it was just so closely tied to
If no, you don't need to redraw the same in the same direction unless you see something different. Like uh, if you see more of a zigzag pattern within the daily versus the weekly or the monthly, yes, you can draw a new one, which
yeah.
is a subset. Otherwise, you just have one which acts as the same. There's no logical reason to have two fibs that are doing the same thing.
Mm. Okay.
But
And then like the new concept you taught us last week. Um, so on that concept on here, you would start obviously here, and the first drawing I had was essentially like, you know, this, this, and back here. It's a little crowded. You can't see very well, but I guess you wouldn't even draw it on here because you wouldn't trade this, right? You would wait until the daily. Then you
so
have
you
more.
got to tell me why you're drawing that. I need to understand so I can give you a good answer.
I thought that the point was like you find where you started, the high point, and then the pullback, so that it helps you calculate, hey, how much of this move um, did it kind of when you go forward, like how much are you kind of climbing up? So if you wanted to
Kind
calculate
of,
this,
not really.
okay,
So let's finish on your fib because I think there's a couple of things we need to talk about, and then I will take over the screen and show you. Like
mm,
we'll take this exact chart
okay,
and then we'll go over the extension versus the retracement.
okay,
So the reason why I wanted to do this is let's make an assumption we're going to the downside, right? You're on the daily. How
yeah.
would you draw a new fib without removing the monthly?
You'd go on the lower time frame, right?
Yeah, you're on the daily.
Yeah, but
Yeah,
you're
so
saying on
let's
the
stay on the
daily,
daily.
let's stay on the daily, and it's reversing,
Yeah, so you're gonna go to the downside, so I want you to draw it for me.
like starting here, this one.
You tell me, and then we'll talk about it.
Yeah, I guess. I mean, this is where you would. I guess you wouldn't even start here because you'd have to brute the
No, no, no.
78.6.
So no, no, no. Don't go there. Right? Don't go there
Okay.
because decisions are made as things are developing. Right? Decisions are not made at the end. At the end, you've already missed the trade.
Mm.
right? As things are developing, so remember what I said. Remember why I said I want to go to the downside. 3 times it failed to make a new high.
I see. Okay.
So I'm expecting a deeper pullback.
Yeah.
Right? So when I'm expecting a deeper pullback, I start to draw those fibs with the expectation that those fibs might not live long, but I do want to take advantage of a deeper pullback if that's what the chart is saying.
But would you draw them on a lower time frame?
So you are already on a lower time frame.
You mean on an hourly? Because that's what we're actually trading, right?
You started with monthly.
Yeah.
The fibs you draw there right now are monthly.
Yeah.
So you are already on a lower time frame. Your daily is much lower than monthly.
Yeah, it is.
Right?
Yeah.
I want to go as high as possible on the time frame and still be as low as possible. So if 1 hour is my lowest, I prefer to see what the daily is doing before I look at the hourly.
Okay.
If that's making any sense.
Yeah.
So let's start there. Wrong tool, but not an extension. We're doing retracement.
This is not. This is a retracement. I grabbed it from here. Yeah, right here.
I just don't see it. Oh, you have removed the left and right extensions? I mean...
yeah, that's because I was... Yeah, let me... I was just practicing, so because it's hard to have it when you're practicing and you have all of it.
Yeah, if you use different colors, it makes it easier for you.
Yeah, what I try to do is I use the dots instead.
Okay.
Instead of the dashed lines to kind of help. Because I still want to see the green to green, because that's been kind of like my, my go-to sign, like where we are.
Yeah.
It's easy to spot the green to green. And then the red to red for the 78.6 and the 236. So on the downside already, you see right here, it breaches it, breaches the 38.2. So we know we're going to have to move the right hand anchor, but we don't. Well, I guess now we know we're seeing it, but at this point,
it doesn't make a new low, so you can't move it there.
Exactly. That's what I was going to say.
Yeah.
Like we didn't know what I meant to say is here you don't know, obviously, right? Because you don't know where it's going to go. So, but now we see it. So clearly now it doesn't make a new low, so you don't move it. And then we see a lot of just sideways movement. I guess this is where we would go, right? And then we go in the lower time frame now to actually see if there's an entry point for the trade.
No, let's not talk about entry. Let's just stay on fibs.
Okay.
So where does the next anchor go?
You don't do nothing right here. The next time an anchor is when it keep going until you see this right here.
Okay.
So you move this anchor down here and this top anchor up here.
Yeah, very good.
And then you just keep going. And obviously right away you see it breaches the 38.2 again. But then you keep going, and then it also breaches the 78.6. It actually even breaches the maximum, the one. So
I like
obviously
that. I like how you're thinking about it. Yeah.
Yeah, it's clear reversal. So we delete it essentially at this, or we know we're going to delete it. So usually this is where I like to just kind of cut my fib short to make it easier on my eyes. And I just kind of say stop extending to the right.
Okay.
Just so I can see, and I leave it here just so to know what happened before.
Okay.
And then obviously
so keep one thing in mind. I think you're doing good. One thing to keep in mind, that 78.6. Generally, I would say, okay, this pullback is terminated because it has, gone beyond 78.6, but I need confirmation, right? It's not the first sign. Remember the zigzag? I said it crosses over, it comes down, and doesn't go below it, it reverses, makes a new high. That's what I want.
Yeah.
So, but it's just, hey, be ready, right? Be ready.
Exactly.
Okay.
And you have to have like a nice pullback, not just like a fake little pullback. It has to be a nice bar.
Yeah.
And you see right here, just like 4 bars in a row, right, of just pullback. So it's a clear pullback. So now clearly you know this is going to be your top anchor, and you're going to wait for your bottom anchor to draw this again. So you keep going. I guess right here, this is a matter of preference. Like some people will draw this, but obviously you know this because this is such a short drawing. This move right here would reach it anyway. So, I mean, I would personally wouldn't draw this. So I would just wait for an actual nice move up to find that next anchor point. And that comes kind of right here. So I guess we could try to do it, but again, this would breach it. So I guess we could try.
I don't know if we will breach it. Check it.
You don't think so?
Check from the top one.
Let's see.
So, no. The first one is the first one breached. Like the first low to the left.
Hold on. This one?
Yeah. If you go from top to that point.
Oh, you want to check the first one? Okay.
Yeah. So just get into the habit, right? I mean, eventually you'll know. Okay, no, it hasn't. But if you just get into the habit, right? So yes.
Yeah, you're right. Actually, only breaches the 50%, not the 78.6. Actually, it does. It breached the 38.6. So you know you're gonna have to redraw it, obviously.
Yeah.
So this is where you bring this anchor point to the next, and then you bring the next the top anchor. Where did it go?
It's somewhere higher. I think it's kind of hiding from you.
Let me move this. Yeah. There we go. Right here. And then actually I'm going to move this a little bit to the right so it makes it better for practice. And then you see right after it made this low, it breaches the 38 point. It actually breaches the 50%. So like
even
you said,
the 61.8.
This is where you be careful a little bit, because it can kind of go either way, but you kind of just keep watching. And then you see it makes a higher low. But then you just keep watching to see where it goes, and then boom, it breaches the 78.6 again. So you're going to have to redraw it. This one is to the downside, so you'd have to redraw. According to this, it's telling you be ready to redraw it to the upside.
Yep.
So you're waiting to see what happens. But
hold on, pause 1 second. Keep in mind the zigzags, right? When it breached that 78.6, that green bar. Yeah. That's a green bar that breaches it. When that happens, that high is not higher than the recent high to the left.
Good point. Yeah.
Right? So you're making lower highs.
Yeah, you're right.
Yeah, so the breach is not by itself enough, right? So we're combining a lot of things now. You have to keep that in mind. Just because it breached doesn't mean, it's going to break. Yes, it could, if it gives us other strong signals, but it's still making lower highs. Got it.
Yeah. Okay. Yeah, technically speaking, higher than these guys, but not higher than the main high up here. That actually caused this fib to be drawn.
Yeah.
Okay, makes sense. So it breaches the 70.6. We see what happens after this to get confirmation of our move, and then we actually see it pulls back pretty heavily, and then you actually get a new low.
Yep.
Right here. Right? Actually, barely. barely misses it.
No, you can redraw it, right? At that point, you can redraw it.
Okay. Because why would you redraw it?
Because the 78.6, the 38 is breached, right? So you're starting from that top to a new low.
From this top?
Yeah. Since the 38 is breached, we're still going to the downside, right?
Yeah. Where's the 38? I'm trying to, for some reason, my head is confused all of a sudden.
From the bottom.
So, the 38. So we made this move.
So that got breached, right? Those green bars breached the 38.
Yeah. This one.
Yeah.
Right here. Okay. So you'd move it, yeah. So you'd move this here. And then you'd move this to this top here.
Exactly.
Okay.
Because you're seeing it live, right? You're doing it one by one.
Yeah.
Yeah.
Yep. Exactly. And then right away, again, the 38 is breached. And then you're just waiting to see where it's going to end, the next anchor point. And it gets very close. We keep watching. Interesting fake out right here because it makes you look like it's going to go back down. But obviously, we don't know where the anchor point is going to be from here. So we just wait. And then we actually see the 78.6 is breached. Okay, all right. Now I know I'm going to have to get ready to redraw potentially. And actually almost makes a new high.
Yeah, but not quite, right? The body, so when we go into reading the candlesticks, you will see that the body is more important than the wick.
Yeah.
That's just a rejection, right? They tried to push it up, the bulls, but then the bears came and said, nope, you're going to get rejected.
Yeah, and then you get a big pullback.
Yeah.
Right here.
Yeah.
Yeah. And then you keep you're just waiting to see where the bottom is going to be for this to redraw essentially at this point.
Yeah. So we can make it go faster.
Right. And I guess right here, this can be
not really. You got quite some distance to go.
Oh yeah. But you wouldn't redraw this right here?
You can.
But it would just be breached, is that what you're saying by this?
No. I'm not making a new low yet, so I'm thinking that's a sideways movement.
I see, because it has to be below.
Like the highs and lows are being contained, right? So price is playing within those highs and lows.
Yep.
Yes.
Yeah, until we get to this point. Yeah, you're right.
Now you have something to draw from.
Right here. Then you get the clear reversal. Yeah. So you draw.
I don't know if I call that a reversal, but you're getting a pullback.
Yeah, or pullback, yeah.
Yes. Or a rally from that point. No, lower more to the right. No.
This one?
No.
Here?
Yeah.
Oh, yeah. Okay. Then you keep going. 38.2 is breached. Keep watching. 68 is breached. 78 is breached. 78 is breached.
You can move faster now.
Okay. Oh, now we got a new high. So now it's definitely, we're watching for the reversal potentially. We keep even going higher and higher. Boom, boom, boom. Okay, and then we got a new high. We're waiting for the low, and then boom. Keep watching, keep watching.
See, now you have a new low, so you have to redraw.
New high and new low. Yeah, right here.
Yeah, because that high did not materialize, right? It was a fake high, but it did not materialize.
Yeah. So you draw it right here.
Yeah.
And I keep going, keep going. Then we move the anchor.
Yep.
Then the 30 just breached, but barely.
I'm going to consider that breached. How is that breached?
The 30.2?
Yeah.
What do you mean? The bar?
The bar is below it.
This one? I thought this right here.
The
is
wick is, but like I said, the wick is not
you're saying it didn't
important.
close? Yeah, it didn't.
It didn't close above, right? It's
Yeah,
on
it
the
didn't
close,
close above.
not the high or the low being there, but it has to close there. For me, at least that's how I draw it.
Okay. In that case, then you just keep moving the anchor, right? So
there's nowhere to move to. It's equal lows. It's actually
right,
even lower at that point.
Yeah, nothing. You just keep watching, keep watching.
So I think we can stop there for this exercise. But what I wanted you to see is that green to green happened. It took time, but it happened. Right? This Fibonacci is very powerful. You just have to be patient. Now, when you're doing options, you're doing it at a lower time frame, so your green to green on a lower time frame is not this wide. So you would hit it without having to wait a month and a half or something. I don't know what day is it. We were on March. So if you go to the bar that went to 61.8, no, 61.8.
Right here? 61.8
is the bottom green.
This one?
The bottom. More. Down.
Oh,
yes.
On the monthly, I was looking at the weekly or daily. Okay.
Yeah. So it took us 6 months to get there. 7 months.
Yeah.
Because our entry, remember what I said where our entry is more to the left still.
Yeah, your entry would be...
No, to the left. Our entry was way to the left.
Oh, still? Yeah.
That's right. It's left. So now,
you're right. It'd be way over
here. Remember when we said that when it breached the 38.2 right there? No, not that one. Where you have your fib.
This one?
When it closed below it, that's the first time it closed below it. That's where I said I will take my entry.
Yeah.
Right? So that's
from here from here to here.
Yeah. It's the right trade.
Be profitable, yeah.
It's the right trade. But that's why I don't like to trade daily time frames. Right? I want to get in quicker. Out quicker.
Pretty much like 3/4 of the year almost. To make this happen,
Yeah. Took 7 months.
Yeah. Should I go in the lower time frame, or should we switch over to the new tool?
Yeah, let's switch to the new tool. I'll take over. Okay. So you were doing ARC K, right? What?
March 2020.
It was in 2020?
Yeah, it was in 2020.
Okay, let's go to
where we started.
2020. What day did you start? Was it this one here?
The exact date was on the monthly fib. I started on Tuesday, March 17th.
Okay.
Right at the valley.
So at the COVID low is where you drew it?
Yeah.
Right, this is what you drew?
Exactly.
Okay. And then we went daily. So same time frame. That's the daily same time frame. This is where I said let's enter.
Yeah.
Right. So I just want to give you this context. So we're on the same page. Let's say, so I'll give you different scenarios for this new tool. Let's say price made this move up, it pulled back, this move up. So move up, pull back. Move up, pull back. Let's say you want to enter here. Okay, you want to enter here. What you're trying to find is, first you have your Fibonacci retracement, right?
Yeah.
So it's breached. So here is where we want to enter. So we've made this high and we're pulling back. And so here's what our fib is. Right? This 1, 2, 3 bar, you'll say, hey, it's pulling back, so I'm going to redraw it. So you've drawn it.
Yeah.
So this is all you've seen. This is all you see. All right? So now, when you want to make a decision, you want to say, okay, if price does something and I'm going to enter, where would my exit be? That's what you want to measure. Right? So you're stepping. So you see this next day it made this pull, and then the next day it gave you, let's say this is your entry. Now you want to know, how high can I go? There are two things, right? We said on the fib, you're negative 272 right here, this dotted line, that's your exit.
Yeah.
So we've already said that's your exit on the fib. I just want a second confirmation. So I'll use the extension tool and say it has made this move before it pulled back. So I want to know, from this pullback, can it make this move again? And so that area, it says yes. If it does this move again, this is where I would exit.
Can we draw that again real quick? I just want to see.
There's two, so I'll just keep redrawing them for you, right?
Okay.
So it made this move before it pulled back.
Yeah.
Now it's at a pullback. If I wanted to make the same move distance-wise, so I want to measure, what is that move? So from the low to the high, this is the move I want to measure. Yeah. Where is my starting point? Is the low before my entry, or the high before my entry if I'm going to the downside. So we'll just keep doing that a few times so you'll understand. So in this instance, when I enter here, my expected exit is here.
Yeah.
This is my expected exit. Okay? Another thing we can measure, again, same area. Okay, after a pullback, it made this move again. It made this move. And if I come down to here, how high can it go? That's this line here. Okay, so now we have two potential exits. But when I draw this, I would do them multiple times because they don't always move the same distance, right? This one is lower than this one, but I'll go back to the past and say, hey, when there was a pullback, what was a nice move? So this move here, and starting it from here, that tells me up here is my exit. I'll just keep that in mind, but I would usually remove it because I already see it here, right? So I look for moves that it has done in the past, significant moves, right? So this is sideways. Maybe this again. See, same thing. So I don't have to worry about it. But here I see a nice move here before it pulled back. Again, that happens to be the same. So now, when I do this multiple times, and it's showing me this is a potential exit, I'm cautious. History has told me this is how much this guy likes to move before it pulls back, even though we had some nice moves here. So I have these two lines, but I'm really cautious when it comes up here because many moves have told me that's the history of this chart.
I see.
But there are areas. There's always areas that have big moves. Right? There's always areas that have much bigger moves. So right here.
But still about the same.
No, this one is higher. It's not this high.
I see. That's a new one. I forgot.
This is my entry. It's not that high.
I see. Yeah. Okay.
So once I draw those, I can delete these guys here, right? I can delete them because I've already identified my exits. But that's the general idea. So now as I move forward, or did I go all the way? Yes, I went all the way. I didn't mean to do that. Where were we?
I think we were at the second peak. Yeah.
We were right here. Yeah. So I went all the way to the end instead of advancing. So here we just, go forward and see what happens, right? Every day. You see price came here. I'm cautious. I don't exit if prices keep pushing higher. But if I get a bar, if this next bar was lower than this bar, I would exit because I've already seen multiple times this is how much it likes to move. But outside of that, it reached this target. And see how it reached there and it pulled back?
Yeah.
So it did not go all the way to my negative 27.2 extension. It could not go all the way there. This was an area where it stopped, which also coincides with double tops. Right? You have so many things confirming. Here I would have been cautious, but here I have two bars that are not able to keep pushing price higher. Yes, it could reverse from here and go higher, but that's an area where I said, hey, that's an exit. But it keeps going. See all these targets. Look how nice they are, all these targets.
Yeah.
Okay, so now let's remove these and say, okay, so price made this move. And I'm at a pullback here. Where can I go? This is where I expect to go. Price has already made this move. From this low, where can I go? Price made this move. From this low, where can I go? These are starting to line up, so I can remove that. So somewhere here is my potential exit. Now this fib, there was never a breach, so this guy keeps going higher.
Yeah.
Right? This guy keeps going higher. Oh, that's not the one I wanted.
That's the different one, yeah.
This one keeps going higher.
Yeah.
And so my exit right there is at negative 27.2. So when I entered here, this is where I want to exit, but this is also ahead. So I'm taking the earlier exits. I'm always taking the earlier exits. I'm not waiting for the future exits, right? Because, I don't know what's going to happen. Now, I could leave a little bit of my position in there and see if it hits. But look, 4 days, it's not hitting. And then it keeps going down. So I don't know what will happen here. So I don't like the waiting game. I already have exit 1 here. My stop is very tight. Here was my entry. So my stop maybe was up here. So maybe I have left the other position. Maybe not, because I am seeing this as a potential area of resistance. This is why I like to use this extra tool. Right? Yes, those targets will hit, but I like to use this extra tool. Now let's look at it from the downside. This is where price does its thing. I just wanted to do the opposite side where we took our entry. I want to show you a few things. Actually, we don't have to let it play. We can just stop it. So this is where we took our entry. Or no, this is where we took our entry. This is where we took our entry.
No, earlier, yeah, on the three, the ones that didn't hit the 3. Yeah,
so it closed here, so we took our entry. So what we're measuring is, it made this move, and from this entry, what high was there was this high. I'm already at that exit if I'm looking at this, right? So that's not an interesting scenario. It made this move from this high. Where can it go? Now this one gives me, okay, I have a better exit down here. We keep looking for these big moves to the downside. It made this move. Yeah, these two align. When multiple things align, I trust them more. Right? This one has no use to me because I'm already there. At my entry, I'm already there. So I'm looking for the next exit. So this is a potential exit. And when you combine that with your fib, right, the negative 27.2, lining it up with this, you take your negative 27.2, you take your earlier entry exit. Because this is sideways movement, it's not as easy to see.
Yeah.
But we're gonna keep doing that. So if you were stopped out and you decided to take your entry again somewhere down here, then what you would measure is, in the past it had shown me a move like this, and can it get there? See, you've taken your entry here, you have some good distance. If this distance is very short, let's just make it like this, just for the sake of, right? If this distance is short and you see it multiple times, it's making short moves, reverse, short move, reverse, you'll skip the trade. That's what this thing helps you achieve. Is, has a big move happened in the past multiple times, not just one time? Has a big move happened, and can I repeat that? Right? Can I repeat? So this is just, for me, the way I look at this is just an extra tool.
I like it.
You can definitely trade without it, but I love this tool because it lets me see this particular ticker has a tendency. You see how 3 times I'm very close to that area, right? And price, what did it do? It got there and reversed, even though it's short-lived, but it still got there and reversed.
Yeah.
So you're trying to find what are possible magnitudes that I can go after, especially when you're looking at your lower time frames. This becomes very handy. If you're not able to capture a good move, right? You're trading the hourly, so this is sideways, this is all sideways, so it made this move, and I want to enter somewhere here. So from the previous peak, do I have the distance? Even though I'm entering here, do I have the distance? That's what you want to capture. So it makes this move. I want to enter somewhere here. Do I have the distance? Right? When you can answer yes, you take the trade. With the hourly, your stops are tight, so you're okay, right? You're okay to go from 44.46 to a 46.46 ish to a $2 stop, to go get to 41.46 for a $3 to your in your direction, right? So 1.5 to 1 risk to reward ratio. Yes, I prefer 2, but this I will always take this. Right? My 2 is somewhere down here, so I might have removed most of my position and let some ride. But this gives me a good indication. Hey, you better exit. This is what I normally like to do, right? So you see this move, and you want to enter here, right? Because it's making lower highs. Do I enter? Let's say you get a signal to enter. Here's what your expected exit is. Of course, this is, in an uptrend, right? A lot of sideways movement. One thing I'll tell you is when you see charts do this a lot, stay between some price ranges, just forget this chart. It's not clean enough. It's good for an exercise, but it's not clean enough. Here you don't know, right? Here, until you go sideways, you don't know, right? You don't know until about here that this thing is going sideways. But here you skip those trades because you're going sideways too much.
Yeah.
So hopefully it's clearer now, right? What we're trying to measure.
Yeah, I like it. It's just we're essentially saying, like, in previously, how much has it moved within the same distance, right? Before it reversed or, went the opposite direction. Reversed is a bad word. I know it's not the best description, but
no,
before.
But it's good, right? How much that has. What's the history of this stock, right? What's the magnitude it moves before it turns around for a breather?
Yeah.
Like I like to call pullbacks and rallies, I just call them breathers because it has to breathe. It cannot just keep kicking on all 4 cylinders at a time. So, what is the tendency of this specific stock? It goes up this much, and when I enter somewhere here, I'd never know tops and bottoms, right? But I calculated from a significant area of value. So whatever entry I get, 40.91 for example, I'm measuring it from this swing low. How high can I go? It has shown me a tendency. It likes to go here, right? It has shown me a tendency. I'm not saying these are good entry signals. I'm just showing you examples. See how they line up? This move and this move is the same.
Yeah.
And you would be surprised how much they line up like this. Look, very close.
Pretty much, yeah.
Yeah, right? This is what these charts, they like to move same magnitude, and sometimes they give you big magnitudes. I discount the big moves. It's nice to have, but I discount them because if you keep waiting, it never happened. Right? You can't keep waiting for those. Hopium is not trading. Right? You don't trade on hope. You trade on what the charts are telling you. So, like, moves like this is a nice move before it pulled back. So if I were to enter here, here's my exit. If I were to see, okay, here's price has been able to go down this much. If I were to enter here, where can I expect price to go? Down here. This is all we're measuring. And when I'm looking at that, I'm saying, hey, here's my fib, here's my exit, right? My negative 27.2. If I'm entering here, but the chart is telling me this is what I have a tendency of doing, right? If I have multiple of these, not just one, like if I keep checking them and it says, hey, this is my tendency, see how the tendency is somewhere here? Then I'm not counting on this.
Yeah, you would exit way before.
I would at least exit 50% and tighten my stop, right? So my stop was somewhere here. When I'm exiting somewhere in this range, my stop is somewhere here, right? So I'm exiting here instead of here. So my stop is moved, and then, oh, okay, it went there. So I can exit another 25% and move my stop a little bit higher, because this is my exit, my normal exit 2 and 3. The reason why I like to do this, it gets me out of trouble quicker. Like it says, oh, this is only the distance that it has done in the recent past. This is only how much it has moved. I get out of that trade instead of seeing it go from green to red.
Yeah.
Right? That's the purpose why I like to add this extra tool.
Nice. I really like it now that I reflect on it. It's super
it's
helpful.
Making sense now, right?
Patterns are very important.
Yeah. So let's have you practice on this a few times, and then we'll go into how you can recognize entries. I want to go into entries, right? So let's just do this one, and then we'll go into entries. So maybe 1 or 2 more sessions, and then we'll go into entries.
I like it.
Okay.
Nice.
All right.